Hello everyone, Scott Bear here, Mortgage Pro. I am part of your real estate success team here inside Realty Pro, and I am here making you successful. Let's get right into the rates. 30-year fixed, 5%. 15-year fixed, 4.25. 5/1 ARM, 3.625. 7/1, 4.125. FHA and VA both at 4.75. Yes, lower than conventional, kind of nice. And USDA is at 5% even. Yes, the rates are still a little bit higher than they were, but we received a little bit of a reprieve towards the end of this week. It was kind of nice. We didn't gain back all the ground that we lost the week previous, but it was kind of nice to see the rates take a little bit of a breather and give us a little bit of stability. So that was very nice. I was rather excited about it. The biggest thing in the news right now is Fannie Mae and Freddie Mac and their future role in the mortgage markets. The Treasury is talking about how they're going to scale back their influence in the future of mortgages. Right now, they are looking at reintroducing private capital back into the mortgage markets and how that might look and at what level. They will most likely reintroduce this back into the markets slowly, gradually over time, most likely, let's say, several years. If they do it any quicker, it's very possible that rates could rise and rise sharply and quickly, and it would put a lot more pressure on the already ailing housing market, which of course we don't need to be doing right now, and I am most likely preaching to the choir on that one. Right now, the part of the plan that the Treasury is talking about, which I thought was rather interesting, is they're trying to come up with rules to make the originator, myself, and the securitizers take on more risk for the loan process. This should be rather interesting, and I'm waiting with bated breath on that one as to how that might look. Um, it's kind of interesting how this regulation and very possibly over-regulation is going to look, and most likely, I hate to say it, is going to tax the loan process even further. It's also very interesting to see how the government is handling this entire process. They are encouraging lenders to do what they do best, and that is lend. And they are trying to make the borrowers borrow and make the interest rates attractive by putting all this stimulus into the market to keep the rates at bay, but then at the same time are making the actual process of lending and borrowing about as difficult as it possibly could be. I don't see how that works or why it works that way, but that's what seems to be happening. It's interesting. It's like putting I don't know, putting a prize fighter in the middle of the ring and then tying his hands behind his back and then pointing the finger at him and saying, "Hey, why aren't you doing better out there in that ring?" And of course, his response would be, "Well, if you'd take the shackles off my hands, I think I might do a little bit better." Excuse me for my cynical attitude. I must be feeling a little bit cynical today, but we need to rise above the things that we're dealing with in each of our prospective markets, and the real estate market and the lending market, and we need to be more successful. We need to be creative and ingenious at our marketing plans, at coming up with new ways to attract and gain new business. And we need to encourage one another to do the same. We need to keep one another encouraged. It's very easy to become discouraged in this market, so we need to encourage one another and keep doing so. So let's be successful, be encouraging to one another. Have a great weekend. Have a great next week, and I will see you come the beginning of next. All right, have a great one. Bye-bye.